Hello everyone, this is Evan from the Trade Risk here on Wednesday, May 4th with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names. Let's jump right into things today. S&P 500 closed down 56 basis points. This is the SPY ETF. You can see we closed exactly where we opened, which is just below yesterday's lows. So let's take a step back, talk about where we came from. Remember, Friday, let's start here. Friday was the day where we saw follow through from Thursday's sell session, and we actually broke through some support right around 207. Remember, this was the breakout area from late April, mid-April. The market then broke below it. This was the breakout level, also the 20-period EMA. So there was some significance to breaking below 207. That happened Friday, but you can see it wasn't without a fight by the bulls because they did drive us off those lows. And we talked about that in last weekend's market recap video, and we said we would be looking into Monday's session to see if it could kind of set the tone to which way this market really wants to go. And Monday we came in with that bullish tone. We gapped higher, almost above the highs here from Friday, and we closed strongly. That was constructive, although we did note that the internals, the breadth, the support underneath the hood of the market wasn't all that strong and convincing. There wasn't a ton of energy behind Monday's move, and lo and behold, the rug did get pulled from underneath us because Tuesday we had a gap lower, basically gapped below Tuesday's entire session, entire trading day, and once again, not without a fight, the bulls did drive us higher off of the lows here yesterday from that mid 205 levels, and then again we saw follow through again with another gap. So we're starting to get a lot more gaps with some overnight movement. That is different. That's something that we haven't seen in quite some time. Remember, this uptrend has mostly been pretty kind of a lackluster grind higher. Now you're starting to see us break through some minor support. We're below the 20-period moving average, which we haven't been since February, and we're also starting to get some of these overnight gaps that are more than just 20 cents like we're used to. They're starting to be $1 or so in the SPY. So we need to be aware of that the market environment is changing just a little bit here. At the very least, I think you need to just be aware of it, be more neutral, tighten up your stops, whatever your process is and trading strategy is, just make sure you adjust accordingly and realize the environment that you're in. For us, we do have a SPY short on right now that we got into yesterday. We're not, completely married to it. We're trying to be nimble. We know it's going to be some back and forth action here. But for now, I think as long as we're below 207, that keeps me in the more of the pessimistic side. You can see we're starting to get a bearish crossover here in the 8 and 20 period EMAs that I look at and use for my trading. So that is a bit of a concern here. And I do think we have this pretty telegraphed support here right around 203.50 to this 204 level that held as support through beginning of April. I suspect that wants to get tested a little bit more convincingly than we did this morning at the lows of today's session. Typically markets like to come back and challenge old levels, make sure that they're still good, that buyers will show up again. So, keep an eye out for this area here in the coming days to potentially get tested or undercut. And again, it doesn't matter what I think. The market's going to do what it's going to do, but it's just a key level, a big level, once again, that I think many people would look at to see if we head down there and see how the market reacts. So to sum it all up, actually one last thing here, we'll go to the weekly chart. You can see we're right at last week's lows here, and we're right at the flat kind of 8-period EMA on the weekly chart. So you can see we're at a bit of a high level of support here on the weekly chart. I think if we close below 205, then perhaps that does signal that we do have a little more in store for us to the downside. Again, we'll just have to take it day by day and see how this market all shakes up. You can see, again, the bulls aren't giving up easy with a lot of these tails on the bottom ends of these past few sell sessions. So let's see how it all progresses. 207 on the upside, 204 to 203.50 on the downside. That is the immediate range that I'll be watching. IWM, you can see rolling over here here just the same. Fast moving averages starting to curl back over. We're back below this 111 area that the market broke out of in mid-April. Similar look here to this. I mean, similar concepts here in this, in as we just discussed in the SPY, although the levels are certainly different. Back down here is the key level 108. This was the major level going back multiple years. This is also where we found support back in the beginning of April. So this might be a big magnet down here right around 108. Let's keep that level on watch. And then finally the Qs, the most damaged out of all of these major indices. And actually, let's take a look really quick here on the fib retracement to see where we are. So basically from the February lows all the way up to the April highs, we've now retraced only 38.2% of that complete rally. So still, all things considered, pretty healthy give back at this point. If we were to retrace 50%, that would come back down here to about 103.30. Again, healthy markets can still easily retrace 50%. So just keep that in the back of your mind. But certainly, you know, the 8 and 20 cross happened a lot sooner in this, in the Qs, and it continues to trend with bearish momentum and bearish aligned fast-moving averages. So the laggards still the Qs, and the IWM starting to, you know, IWM and SPY, I guess, arguably still in similar positions performance-wise. I think the SPY is still up on the year. Maybe it's about flat, and I think the IWM is maybe down just a little bit on the year, as opposed to the Qs, which is down 5 or 6% on the year. So let's move into some other markets here. TLT continues to sort of grind higher in this sideways channel here. Found support at 127, heading back to the midpoint of this range. Let's see if these if the 8 and 20 can curl back over to the upside, and we can head to the top end of that channel, of that range. USO feeling a little bit of pressure as of recently. We had this 3-day pullback. That was enough to get us out of our trade. You can see it did hold in green today, but still struggling, not very convincingly with today's session. We got involved in USO right here on Tuesday. We sold out half. We managed to get near the highs of the day here on Friday for half of our profit. Half of our position off in profit, and then we got stopped out of the remaining here on yesterday on Tuesday. So nice little win for us. Would have liked to see it, you know, catch its footing a little sooner to get a little more out of this trade, but we'll have to let it pass for now. Still healthy as long as it's above the 20 period, but certainly lost some of its upper level momentum. So we'll move on. Keep an eye on it though. I think as long as it can hold above today's lows, I think that's constructive. Get back below 1060, and that gets a little more concerning. UNG, you can see starting to perk up again. This one's been all over the place, still just range bound and choppy, but I do like the potential and the action here for a longer term sort of bottoming formation that is trying to occur here in UNG. If it can get back above 7 and actually hold above there, I think that would be constructive. Looking at metals, gold giving some back today, filled the gap here from last Friday. Still looks constructive, all things considered. Weekly chart, you can see just working off this massive expansion bar that we put in of almost 5% last week. Silver, similar situation, pulling back now to the 8 period. Notice it's pulled back 3 days and still just challenging now the 8 period EMA. So a lot of strength here in silver. Healthy action to be pulling back like this. Have to see what comes of it. UUP, US dollar, this one getting a nice, continuing its bounce higher off of yesterday's little reversal. We'll have to see as this comes back in and tries to maybe fill the gap here back from last Friday and also challenge some of these fast-moving averages. It's below major, which would now be considered and is likely to be resistance, certainly below a lot of overhead supply here. So it's going to be troubling here for the US dollar to get back above, above these recent highs, but or these recent levels, not recent highs. But if we can get above 24.50 here, if the market does rally back above here, then we do have some major sort of false breakdown that just occurred here in the US dollar. If it can get back above 24.50, keep that on watch in the coming weeks. Let's get into some of the sectors here. Really, utilities, just such an absolute standout. This has proved to be such a just a fake out kind of shakeout of these week longs here on this double day Wednesday, Thursday of a couple of weeks ago. The markets just continued to grind higher, hasn't been a red day since. Actually, that's a lie. We did have a couple of red days, but forward progress made on every single session since this double day washout here. So almost back to new recent highs here. You can see it reclaim resistance, trying to get back above this level here, and it successfully did so. That's very constructive in XLU. The staples, similar situation, not as bullish, but trying to work above this big washout that it had, these defensive sectors had just a couple of weeks ago. So very constructive there. On the downside, they're starting to pick up now. The number of sectors that are performing on the downside, bearishly performing, is starting to increase. Healthcare has been in trouble as of late. It's below all of its fast-moving averages, coming back down here to its old breakout level. That's IBB as well. You can see giving up this breakout, starting to act pretty nice, pretty bullish here just a couple of weeks ago when it broke through in the beginning of April with this nice expansion bar. That's given it all back, just moving sideways back in this old range. XLB, the home builders, giving it up a little bit recently here, coming back down to a big level. If you go to the weekly chart, you can see this area right in here, right around 45.75 or so, had kept a lid on price. We're coming back down to test that. Financials, a little bit weaker, starting to roll over, and energy especially has been getting hit as of recently. So a little bit of concern there as far as breadth goes. That's what we've been noting. And also another little kind of plus to the bear case right now in the short term that this market's in for some near-term turbulence. Let's look at some individual names. Apple, will start there. You can see it did find support kind of right where you would expect it to, right back down here at these old levels. Let's see if they can hold. We did get a bounce, nice like one-day bounce. Let's see if we can get any more than that though. It would be a concern if we just immediately came back down here and started slamming against these lows once again. There's probably a lot of air underneath here as we start to get below $90 if Apple does start to break that support level, this week's lows. Google hanging in there as well. This one trying to hold on to this bottom of support down here right around $700. Amazon holding up pretty resilient, all things considered, flat on the day today. Fast moving average is starting to catch up. Gap so far has been defended. That's constructive. Facebook, even more constructive than Amazon so far. This gap has been held in there. 116 on the downside. That level needs to hold. And then on the upside, you probably get some type of momentum trade here if you can start to get back above 118.50 or so in Facebook. Twitter, catching a little bit of a bounce today, up 6%. That's constructive. However, the technical damage that's suffered here is still pretty immense. It still just needs more time repairing. This can come all the way back up here and challenge the gap up here right around 15.30 until it fills it, until it gets back in this old range. You got to be careful here in Twitter. Potential nice double bottom though, based on the lows here from February and then this week. Lastly, let's look at Tesla, which is reporting earnings out after the bell. And as I look at it here, 234 is where the print is. This is about at 4:25 Eastern, so we'll have to see if it actually maintains there. So essentially, it just looks like it recovered today's sell session, and it's back to yesterday's closing price. I mean, again, we'll have to see how it actually opens tomorrow morning once the conference call and everything else gets underway and digested, but so far it looks like it's up probably about 4%. Exactly what it lost in today's session. And I think that'll do it. Alibaba, nothing too much interesting happening there. GoPro, this reports earnings, I think tomorrow. It's at the lower end of its range here. Again, this thing's been crushed for the past many months. Let's see if it can finally get an earnings report that it responds favorably to. I don't think it's almost never, I mean, it certainly hasn't had that happen going back almost a year now, so we'll have to see if that changes heading into tomorrow. So that's what I have for today. I hope you guys enjoyed. Again, if you like the videos, please do subscribe, bottom right hand corner. As always, thank you for watching, and I will catch you guys next time.